All right, so well, hello and welcome to Stock Market Mutterings. This is for October 8th. This is also where I will share with you my good trades, my bad trades, my fortunes, my failures, and everything in between in the attempts to help you become a better trader and also shed some light on how I see the markets, and hopefully that turns out to be profitable for you. Now, before I get started, as always, if you need help with your trading, go to thelincolnlist.com, click on the Trade Room tab, and you can start trading with us right away. Let's begin by talking about the day. I'm going to say it was a pretty good day. It was a good profit, not huge. I'm not going Ferrari shopping this afternoon, but it was green, and as I always say, green is good. Now, it didn't start out that way. It was a little choppy, and some of that's to be expected in this market thing that we're going through, whether you want to call it a sell-off, whatever. It makes no difference, but the market's got a little bit more volatility in that, so sometimes that makes things challenging. And again, I'll go into that just a little bit more here. One thing I do want to bring your attention to is the behavior of this market. And one of the things that we talked about both Thursday and Friday's mutterings, if you take a deeper look, is this post-lunch rally. Now, I brought it up today on social media to remind everyone, and that starts like on Thursday. This thing sells off. I'm going to go to this upper chart. I just want you to pay attention to the upper chart here. This is the intraday 5-minute. Here's Thursday, where it sells off all day, and it starts to get thick. Then it's post-lunch. Now this, again, to remind everyone, I'm in California, so these times are Pacific. So this is 2 o'clock, and then it just runs the 2 hours right into the close. Kind of pulls the same maneuver on Friday. Now we had a jobs report in there and stuff, but tries to bounce early, fizzles out, sells. I mean, when I say fizzle, it just sells right to lunch. Then it has this post-lunch. This one shows up just prior to that 2 o'clock time and rallies to the close. Again today, ramps up at the beginning, tries to get some footing, sells off. This time it stops, and actually builds somewhat of a base if you look up here in that chart. But it doesn't really rally until 10:30, 11 o'clock, 1:30, 2 o'clock, and then right into the close. Interesting. Keep your eye on it. Interesting how that continues to happen. I mean, that's how we make money as traders, is following these patterns, seeing these behaviors in the market and trading accordingly. So that's something to pay attention to, see how long that continues. Now, if you remember also from Friday, I had two plans going in today. I'll talk about these trades because you're going to see them up there. The first was SQ. Yeah, SQ, I believe, was the first one that I went into. So I had two plans. One was I felt we were either going to rip in the morning or we were going to sell off. Real Einstein, right? Hey, Einstein, smart. We're either going to go up or we're going to go down. What a brilliant guy you are. So I thought, well, if we get really vertical and we rally, I would be thinking about short selling a lot of these stocks because I'm not so sure this rally is sustainable over a few days' time. Again, that's just hypothetical. Things need to set up. Or the second one is we flush and we get more panic selling, and at that point I would be a buyer. And that's kind of what happened. Well, it kind of happened in both ways. It started to get kind of perky right there in the morning, and then things started rolling over. Now, once things started flushing down there, I expanded my normal range. So let me kind of explain what I'm talking to you guys about. When I do counter trend trading or reversal trading, a very important thing to me is range. That's the daily range of a stock. And I'm not going to go deeply into this, but if it's your first time watching, you don't understand, just so everyone's on the same page, range to me is if a stock normally moves $2 to $3 a day, up or down, and it's down 6 or it's up 6, then you're outside of range by $3. So the higher it goes out of range or the further it gets outside of its range, I consider that to be extreme, and that's how I look for counter trades. So as I was looking through it, I felt that many of these, even though they were down, and stocks I normally trade, Netflix, NVDA, stuff like that, yes, they were down past their normal range, but based on what we saw Friday, like for example, I'm going to bring up Netflix because this is my thought. I don't want to take up a whole bunch of time talking about this, but Netflix was kind of on my list as a bounce play, but I passed on Netflix because it was down $20 on Friday, and I'm like, it's only down 7. It may end up going down 20, so I don't want to do that one. I end up choosing SQ, which was a former runner. It's been a really strong stock, and it gaps down, and just not gaps down, but it rolls down 3, which is pretty steep for SQ. So I'm like, all right, we got a little base here. Let's try to work with this trade. Now, it turned out to be okay. It worked out for about $1. I'm going to open this chart up just a little bit. Right here, we had a nice little spot down off this pivot where we could control our risk. And it looked pretty good. It looked pretty good all the way up to this point right here, where I was like, this thing might break out of this shorter term range and go green for the day. So I kind of thought once I picked up the dips on a lot of these stocks that they would go red-green, that you would see a red move and then it would go green and then green by a couple dollars. So I was thinking, you know, big picture here, not just scalping, but it didn't work that way. I took a small profit on it, and what turned out to be a blessing, because look, it just rolls over like so many of the other stocks. And then you'll see it on the brokerage statement there earlier, if you didn't already. I picked it back up again a second time on that flush, and that time it was a little bit stingy here. It just was kind of fading and going back and forth. I mean, eventually I got out of the thing for just under break even on it. Had a nice win on the first one, small loss on the second one. Down here I had some signals to add to that position, because once it started rallying and the market was lifting, I figured this is the time. But with the way so many of these things had reversed course, and being a little bit later into the session, I decided I'm just going to be patient with it. I don't want to get over aggressive with this trade. So that one was pretty good. It kind of worked out according to plan, although I was looking for a little bit more aggression. I had the same exact thoughts with BA. Was trying to get a reversal on this. Now this one was a bit different because I missed the opening flush on this to buy. So I pick it back up a little bit later here on what is like a pre-market high flag breakout. And that turned out to be a pretty good one there too. So I'm not going to complain about it. But I mean, both of them worked out pretty good there. Again, my thoughts here, because that's what I want to do. I don't want to talk about making money or whether a trade works out. It's my thoughts, what I was thinking. And in this case, after a 3-day sell-off in the markets, flushing below 50 moving averages, and many of these approaching their 200 moving averages, my thought obviously was red-green. So when I was picking up something like an SQ that was -3, I was looking at getting $3 back to green, and then maybe another $1 or $2 on top of that. So I was thinking this really kind of was playing an epic reversal. Give me a big epic type of reversal, take these things green, put some big money in my pocket. That's what I was looking. I didn't get it. I got part of that. They started to do that, but then they started petering out, for lack of a better word. Now, the reason that you've got to be so tight with these, because I got caught out today. I said I did make a mistake, and I got caught out here on Netflix, because as I had these positions open, this one, not Netflix, I always get Netflix and NVDA messed up. I always do that. I always get them. We had a joke about it today. It was NetVidya. Since I say them both all the time, I'm going to combine it to NetVidya from here on out. Okay. So this one was the same. I had some profits up here, but I was managing my BA trade and the SQ, and this thing just got away. Now, when I say got away, I don't use hard stops. And sometimes when I trade multiple positions and I don't use hard stops, you know, sometimes they'll sneak by you. You know, that's just the way I trade. I'm not saying that's the perfect way to do it. You may disagree, and I understand, but that's how I roll. That's how I've been rolling, and it works for me. And that's also why I trade a little lower in position size. Now, the reason I say get away from it is because normally on 99% of the days this year, you can do that and you'll be okay, because it may slip 50 cents, $1 or something like this. But this market is nutso. I mean, it'll turn around, you turn your back on it, and these candles are dropping $3, $4. And that's what happened. I got stuck here for about $3 or $4 all the way down into 260, added to the position, and got back to just about break even from the close. So this one was dirty, and it could have put a big hindrance on my day. So the reason I bring this up, and what's the point in all of this, is that in this market, when you get a sell-off like this, or the market starts to get exaggerated ranges to the downside, volatility normally comes in right after. It always comes in right after that. So you're going to have volatile market because it's going through changes. So it's going to need some time to iron itself out here and go back or lower the volatility. So in that, you're going to get wild ranges. You're going to get wild spreads. You're going to get these moves that go up $1, $2, back the other way. So you have to prepare for that. You either don't trade, or you have to lower your size, or just be prepared for what's going to happen. So I was kind of prepared for it. I traded lower, lower position sizes, but it did get away from me. I don't want to say that I did a good job with it. And maybe me getting out of it had a little bit more to do with luck, because, I mean, maybe it would have stayed down there and I would have just had a hell of a loss. but I managed to add to it. I was patient, you know, so maybe half luck, half skill on that one. But this is a product of what the market is, because normally you won't get this reversal right here. Was from 270 all the way down to 261. That was a $10 reversal. That's nasty. That's real nasty. Put a big hurting on you. Now, on that, I was able to get Netflix, NVDA. And this was one I was actually kind of bullish on early. I was like, if this market holds up and this thing stays, I like this. I really like this one long. And then everything just starts dumping, and it got aggressive. And this one just had a little bit of slippage. And when I say slippage, I'm referring to it hadn't quite followed everyone else in beta land. And I got a nice little short right here on the breakdown. I want to say this is not the best kind of chart pattern I like. It was more of a decent chart pattern followed by a whole bunch of conviction and experience and all that kind of stuff. And what was happening around me, like everything's dumping. This is one of the last ones that's got some room. I got like $5 on this. I mean, it's turned out to be the biggest trade of the day by a long shot. And I was just expecting it to fade a little bit, and then I was going to reverse course. But this one I did really well. And again, it wasn't 100% technical analysis. Sometimes it's your gut. This is what you go through. Why we say you guys got to do this for a while. You got to have that screen time, because it comes from experience and just understanding how the markets work and all that good stuff. So, I mean, that was pretty much my day right there. I didn't want to get overly aggressive because of these wild ranges and all that stuff. So I managed to, you know, pull together some nice profit out of it, doing a little bit of short and then a little bit of long. So what do we do tomorrow? I mean, like, what are we looking at tomorrow? You also see this PYX up there. It was a scratch trade. I just did not get the juice on this one. I managed to go long on this, and probably the only person that didn't bag the big bills on it, but that's another trade entirely. Thinking about tomorrow, I mean, a lot of these stocks, here's the thing, they've got a ton of room. Like SQ is down by its 50 moving average. This NVIDIA is all the way down here by support where it was in later September. Some of these are reaching some really nice bounce areas. And just from the way the market's operated over the last couple of years, a bounce seems like it's in the cards here over the next couple of days. However, the other side of this that you have to look at is, even though we've sold off this month, I mean, let's just take NVIDIA for example. Even though it's from 290 down to 260, and it's had a hell of a sell-off over the last 4 or 5 days, look where it is. It's still where it was in September. So, I mean, even with this massive retracement, you're going to go back and look at a lot of these stocks, and they're not even past September levels. So there's a lot more left to sell off if that's what's in the cards. I mean, don't discount the possibility of a serious aggressive sell-off. I mean, even with these hefty pullbacks, it shows you how high some of this stuff was. So we're going to have to pay attention to that. Again, I still want to use the same strategy. Big rips, big verticals, especially at the open. I want to be more short biased then. Now, I know at some point that'll backfire, because there will be a sustainable all day, a couple 100-point knee-jerk rally in the market. There always is. So I'll be able to recognize that and switch my bias quickly. But for now, that's what I want to look at. And any big, you know, mass down flush on these names, I want to look at those too. So I'm still interested in Apple, Netflix, NVIDIA, you know, SQ looks good, and possibly Wayfair, this W. They're at spots where I think you're going to see a nice rally and you can get some money. Again, a lot of this has to deal with the setup, especially when volatility is like this. You really have to pay close attention to the setup and be a little bit more discriminative about what you take. I've been talking so long, my freaking light went out. I'm in the dark now. Anyway, I'm going to end this here. I've talked long enough. I've said as much as I'm going to say about what I'm going to say. Just remember, if you're going through this for the first time and you're a little bit confused, you don't have to trade. You're not obligated to trade. Do a little study, do a little research on this, or trade real small. Give yourself that little bit of room for these expanded ranges. That way you just can't really get aggressive right now, I don't think, in a lot of cases. The day will come here soon in the next day or two where that's on the table, but right now it's sort of like a risk off day. You want to keep keep those positions and, you know, take that money when you get it, at least peel a little bit off on every move that works for you in your favor. You'll see I did that. If you look back through the results, I took a little bit off of BA and a couple of those other positions, booking a little bit of profit. That way I had a little bit more flexibility. So anyway, I'm sorry I have to finish this in the dark. Maybe I look better in the dark, who knows? But other than that, if you need help, you know where I'm at. Thanks for watching Stock Market Mutterings. I'll check back with everyone tomorrow and we'll see how we did.